Well, the market seeing somewhat of a turnaround yesterday, falling into the red, with the banking sector, as I was saying, exerting much of the pressure that we did see. What sense are you making of the market activity we're seeing at the moment over in Nigeria?
Morning, Alishia. I think what is actually driving the market has actually been an investor's perception. If you look at the way the market has actually behaved over the past couple of about 2 or 3 weeks, we've actually seen positive perception from investors generally, and I think that actually has to do with the way the economy has actually behaved over the past couple of weeks. We look at the fundamentals of the economy. Oil prices remain strong, fairly at about $80. Investors are also moving in. Oil prices are relatively stable. Production is also looking stable. The macros are not looking too bad. The naira has actually stabilized around the 148, 149 naira mark, and I think those are the kind of things that investors are generally looking at, and that's also translating to the equities market of the economy. By and large, we've actually seen the banks do a couple of write-downs, and I think perception is also getting is improving by the day, and I think that's actually been factored into the prices of the banking stocks generally. Ordinarily, would have expected the banks to come out with a large loss positions by the time they start declaring their results for full year 2009 December. But we think we might just see a couple of write-backs, which might actually buffer their positions. The losses we might actually be seeing might not be as bad as what people have actually been expecting. I think that's actually accounted for why the bank stocks have actually rallied over the couple of weeks.
Well, if we look at the banking sector specifically, I mean, most counters within that space traded in the red yesterday, but we had the likes of Sterling Bank, Intercontinental, Spring Bank and Union Bank rising from anything between 2.5% to 4.5%. I mean, those were the better performances on the day. Why this divergence from the overall trend, especially where in that batch we've got the likes of Intercontinental and Union Bank, which sit amongst the distressed lot within that space?
Ordinarily, you know, we think we've actually seen the biggest moves in the tier 1 and tier 2 banks, really. And if you look at the smaller banks, especially the troubled ones, we've not actually seen investors' confidence has not actually been there. I think a lot of people are probably still a bit skeptical. The position still remains a bit hazy. Really, people don't know what's going to happen at the end of the day. But we think with the passing of the asset management company bill by the lower house of the National Assembly, we think things are probably looking slightly rosy for the banks. But people still need to dimension it, and they need to be sure that the bill will also still be passed by the upper house of the Assembly. Once that comes into play, then people want to see how the CBN is actually going to take over the assets of those banks and to inject liquidity into them. And the eventual sale of those banks will definitely determine how they will behave over time. But investors still need to be very, very clear and sure of their position. Ordinarily, we'll still expect some speculators to move into those positions at some point, but how soon that's going to happen, we don't know. And of course, we do not expect shocks to come out from that part of the banking sector, knowing fully well that we're having a clearer view of what is going to happen over the next couple of months.
Well, certainly many hoping that not much more is going to be unearthed within that space. Another sector under pressure yesterday, the oil and gas space. Massive losses coming through on African petroleum. We saw that counter closing limit down, losing 5% by the close. We know that it recently released Q3 results, which the market was certainly not impressed with. Profit after tax down 196.7%. Is the market still reacting to those results?
I think the market is still reacting to the results. I think AP had some challenges in the course of the year. They had to restructure their operations. I think they took some loans from the banks before they did their offer, and I think the funds from the offer are just trickling in, knowing fully well that the banks just underwrote, knowing that some banks underwrote the offer, and I think they've actually moved the monies to the company. So I think the initial shocks that we probably saw, if you look at the results as at the Q1, they had made about almost 4.6 billion in losses for AP, and I think that probably impacted their results up to the end of the third quarter of the year. But by the end of the third quarter, if you look at their results, they actually made a slight positive move in terms of moving from about 5.6 billion loss to 5.5, which I think is a good development. So full year, we are not expecting anything much, although we definitely expect that their loss position should be reduced. But by the time they are starting on a clean sheets, knowing fully well that we've almost concluded the first quarter of this year, we think the company should actually bounce back to making profits.
Well, certainly you're not alone with that sentiment. A broker that I was speaking to earlier this week as well reiterating that for the full year they are expecting a better performance from this company, and have said that what this company has chosen to do is just let all the bad news get out all at once, and part of that being the 17.5 billion naira provision to accommodate potential losses moving forward. Others, though, have suggested that they see the share price movement heading downwards, settling at around about the 33 naira mark over the next 6 to 12 months, indicating a 27.3% downside here. I mean, would you be buying at this stage on this counter, or just not necessarily dumping at this stage?
I think the market is actually the market actually is a place for willing buyers and willing sellers. And I think it depends on how people actually dimension the performance of the company. Like I said earlier, for their full year, we think we'll probably see a reduction in their loss position. We're not saying they're going to move back to a profit, but if we know that the money that they have actually raised, they've actually used that to offset part of their loans. And I think ordinarily the part of the interest expense that they would have actually incurred would also fall part of the bottom line going forward for the company. And based on that, we think it depends on who and who is buying, depends on who and what. I want to lean on the side that equities prices should actually be a reflection of future earnings of the company and not the historicals. And if we go by that assumption and we look at the fact that the crisis that the company actually had in the past might not just be repeating itself going forward, then I think I'll lean on the part that the company would probably actually start doing well going forward. And of course, if the earnings are good, and I think investors will react positively to the results ordinarily. Fine, we might see some shocks here and there in the short term, but I don't think the stock will probably come as low as would lose as much as 27% of its value, knowing fully well that the government is actually looking at deregulating the economy. The company actually restructured its operations. They reduced their loan exposure recently, and I think things are also working for them. They have the retail outlets, and of course the business model is not in jeopardy. So I think the company should probably do well going forward, and I think we'll probably at some point see some demand for the stock.
Well, just moving on onto another space, food and beverages sector, as I was saying earlier, weathering the storm quite nicely. And within this space, Unilever Nigeria recently also released full-year results for the 2009 period, showing impressive earnings growth and remarkable growth margins as well. How are you rating that stock at the moment?
Unilever, we are quite aware that the company actually went through a significant restructuring of its operations over the past couple of years, and they just probably returned back to profit-making ways last year, declaring about 68 kobo in earnings per share at the end of the year. From that, they've actually moved to about 1.30 kobo this year, which is about almost 100% growth in its EPS. But then we actually noticed that the stock price actually moved from about 6 naira sometime last year to about 26 naira, which I think is a very welcome development. But at these levels currently, we think the stock might be a bit stretched. And I think I'll probably be neutral on the stock at the moment. We are aware that the company will probably continue to do well going forward. We probably still expect some earnings growth, but we don't expect it to be that significant as much as what we saw last year. And based on that, would probably want to wait a bit to see what's going to happen by the time their Q1 is coming. But at the same time, the company is actually trading at a P multiple of over 20, which is far above what the market average is at the moment. So we probably want to pause here. The investor might just want to take a pause here and probably look at the numbers once again and look at what the company can actually do going forward.